Alrighty, hello everybody. Welcome to the FX Evolution live market webinar. We'll just get this slide on and we'll get things started. Hope everyone's having a great week. Let's move on over now. So, my name's Thomas Atkinson. As always, you're joining the live market analysis series for the weekly webinar for the 16th of June 2021. How is everyone going out there? Tyrone, how are you going? Welcome. Hopefully you're doing all right.
Good. Hopefully you can hear me okay.
Yep, I can hear you, so everyone else should
Excellent.
be able to too.
Perfect.
Just make sure
Welcome
someone
everybody.
can.
Yeah, it sounds good. Yeah, everyone will just have to excuse my croaky voice at the moment. As you probably, a few of you are aware, I've been battling a bit of sickness, but it's okay. We are all good and ready to tackle this live market. So can't wait to jump into it and see if we can get some opportunities tonight and early, well, I suppose later into the week.
I've got to say, the meme room just keeps bringing them. I love Pengu or Pingu or whatever you want to call him, and yeah, that Newt was a thing of my childhood for some reason. Risk warning before we get into today, Ty. Of course, it's important to understand that any information contained in this webinar or live video stream is purely for educational purposes, and the information presented must be considered only general in nature. The information provided will not take your specific needs or circumstances into consideration, and you must look at your own personal situation before making any financial decisions. So Ty, as we like to do, let's get straight into the charts, and straight away a warning for all members. Of course, FOMC economic projection statement, press conference, BOC, GDP, Governor Lowe. I mean, what else do we want to see here through the session? Let's just quickly refresh this. Now, this is set to American time, so you can see here 7:02 a.m., so Eastern time in America. But look at this Wednesday lineup here. So we've got the Wednesday lineup, FOMC in the afternoon for America, obviously late in the night here for Australians and New Zealanders. And then we've got a huge amount of press conferences and monetary policy assessments. Ty, it doesn't get much bigger than this in terms of 1 month, other than maybe non-farms, and it's sure to probably give us direction. So I think what we're seeing here is a lot of setups appearing on the screens, a lot of key resistances and key supports setting up in the currency worlds, the commodity worlds, the stocks, etc. And hopefully, whatever position side you're on, of course, in the community, it works out for you. But yeah, I'd be very, very careful here with what's going on with FOMC. Because, of course, we can see in this US dollar straight away as we go into it, it's at the resistance point. Look at the coil. Look at the spring here. Ty, your thoughts?
It does not want to break. It wants to break bad, doesn't it? And yeah, look, realistically, it's primed. Not just the dollar index. I think everything is primed for a reasonable move now, and it's going to take probably. I think the time of just letting technicals play out is probably over now. The market's got to really put up or shut up, and I think it's going to come from one of these big events where there is a lot of news there. That's a very, very big lineup of news, considering that we're not in a non-farm payroll week. So yeah, looking forward to seeing how this one plays out.
Yeah, I think the best place, just starting here, looking at this coil on the 2-hour and 4-hour charts, is that we clearly are at a point awaiting this news. The markets only sit at a point of critical levels before or after news, and we will have a direction. We close above here. What do we start doing? We start having to go with US dollar strength is the new thing, and we're moving towards the 91.40. So for members, this is the ultimate goal here. Of course, there will be some problems along the way. I think if this break does occur, we've got the 90.88 area, previous support, resistance, and a point of issues. So close breakout, what I would guess we would expect is this. Boom, boom, bang, down a bit, and then hopefully a continuation pattern, something like that. That's the upside. Because we're in a coil, because we're ahead of the FOMC, it of course could go backwards. What we're looking for there is just a big pullback. And I think really there's a few key zones that I'll put on the charts right now for you. I think this is one, somewhere around this area, this 90.20 area. You can see all of the points where it has hit resistance. 8-hour probably shows this better. Most of the closures here. The closure, the wick, the closure underneath, the wick, the closure underneath, 90-20 is in, Tyron and I. This is the site that we believe is the first support touch. And then if it keeps going through there, some people would say 90, but I think actually after that point, Ty, depending on what happens here in the FOMC, it could go all the way down to the 89.60 zone. So there's two close areas here. You can see the coil or the spring. This is what happens ahead of a big announcement. And you've even got that giant long leg doji here on the 8-hour. Break above, movement up, and bullish strength in dollar index. Break below, further weakness in dollar index. It's on. It's definitely on right now.
I think my preferred move is the up on this one. I think if it goes past that zone, I think it's got a very, very clear direction. It's going to gravitate like a magnet to that 91.40 area. And I think you're right, 90.80 will be the first point of call. But if it breaks through that, I think it'll get to 91.40 very, very quickly. And it's going to take a lot of our favorites with it, namely the US dollar CAD, US dollar yen, and it's going to short the hell out of the euro.
Yeah, so let's move over to the euro here. So the euro's already preempting kind of a little bit of weakness here. This actually looks flag-like in many ways.
It's a dead set flag. Yeah. It is a dead set flag coming off an almost ugly head and shoulders. That's a flag that, if it breaks, and that's going to go exactly to that point. Look what it's highlighted there, the 120.
And this is where
it's been dying for the 120. It wants the 120, and it will get the 120. If that flag breaks, 120 is its target, and it will get there.
It's a definitely a good flag. It probably meets all of our general course rules as well, Ty. When we're going with fibs, we always want it to come back to no greater generally than the 38.2. I've done a bit of extensive knowledge plays here, and so has Tyrone. We don't mind the wick going to the 50, but for members out there, always remember the flag has to fly. We want to be able to put that out there, and we want to make sure that it actually is a flag that will fly, not a useless rag that we don't want to trade. We don't want that. So realistically, it's about having a pullback that resets the indicators, remember, and then a continuation of the trend. We want to see momentum. A flag is not meant to be a pullback. It's meant to be a resetting of the indicators, a trapping of all the market psychology. So all of the bears continue, like they might take profit, and the ones with the retail, like the paper hands kind of thing. And then we also have the bulls coming back in thinking, oh, what a great level to buy. And then they all get slammed and unfortunately lose money. That's the idea behind one of these. Let's have a look at the pound. As usual, Ty, this has been the stronger of the two. Look, pretty disappointing close out here. Let's have a look at it on the daily. So the daily even got a little bit below at this point. And this is kind of like a premeditated potential movement down here. I mean, this is now shown that it doesn't like trading technically twice. I mean, number one, broke out up here, very weak move. Number two, broke down up here, and then very weak move. And it's a little bit disappointing here on the pound, and I think that's why a lot of people haven't been trading as much. We go over to the odd. The odd is also showing weakness here ahead of the FOMC statement. You can see the 2050 cross on the daily. Will this finally be the point where it can go back down to the 76? This is the clear level for traders out there. Forex traders, 76 is the clear support, and it's the clear level that if we do see a fall through, as in the US dollar strengthens through this FOMC press conference and other things that are coming out, that's the zone we're looking at.
Yeah. I think it was surprising that it actually didn't get to the 76 the first time. Like it broke through and then surprised everyone by going straight back in. But key things are happening now. I think you're getting that 50-20 cross. That it's about to happen on the Aussie. It happened. If we can go back to the pound for 1 second, I think it's more compelling. The pound one was actually even more compelling on the it might have been the 4 hour you were on. I liked it. Was it the 8 hour? Sorry, yeah, there it is. There. I mean, to consider how important that is. Look at the last cross. Like the last time this crossed, it was down at around that 38 level. So yeah, it's pretty significant, and it's testing it from the bottom. I mean, that to me looks like a market that's bound to fall. Like even though it's prepping for the news, it looks like a tired market that is pushing down lower and lower and lower. That's making a series of lower highs and lower lows now on the 8 hour. Make no mistake. Like that's there's no disputing that. And now what you're seeing is you're seeing the wicks. Yes, they are trying to rally, but all the problems are in front of it now, not underneath it. So you've got the 20 and 50 moving average. The 8 hour is a chart that I very rarely looked at, but because Thomas keeps harping on about it, I started looking at it, and I'm starting to really build a case for it. I actually like it. It represents a really, really good time frame because it does represent full market opens. I like it. I like it when a whole market session is represented by one candle. So I'm looking at it more and more. So yeah, like I do, treat that with a lot of respect. That 2050 moving average cross.
Yeah, I think that's why we always talk about this as we're always learning, aren't we, Ty? We're always improving, and we add those improvements into our course as well, by the way. And we always thinking about new ways to approach that are, number one, logical. They make sense. And the 8-hour chart, it basically is 4 hours. The reason why it's working well is because you can see it on the charts. You can see the cryptocurrencies trade really well off it. You can see that in currencies, they're actually not too bad as well. It smooths it out. Ty and I are a big fan of the higher time frames because more people see them. And it's always about that constant improvement. Now, I added this one into the rooms in Chart of the Day, Ty. Now, if members don't know about Chart of the Day, jump on in. Make sure you've got your Chart of the Day set up here. And there'll be a little bit of inception here, so just give me a second. And if we scroll up, where did I put this one? Chart of the day for the Euro Pound. Here it is. So the Euro Pound was here, and I was talking about this series of lower highs. This is a classic setup, a classic Tyrone setup, I'll call it, because it's all the principles of what we teach. A series of lower peaks or lower highs. What's that telling us about the market? It is telling us weaknesses in the market. Then we have an amazing support level. Of course, a descending triangle here. But we don't need to think about the pattern. Get away from the pattern concept and get into the psychology concept of what this market's telling us. So let's get out of there just for a second now, and we'll scroll on through to back where we are here. And there's just been some actually pretty good trading here, Ty. And you can see that it's come down, it's bounced up, it's sold off back down, it's come up again, it's sold off back down. But you know what? The time is now. If this doesn't break, as we say in the course, and we really stress this, it really should have broken somewhere around here. This should have been the zone that we saw it. We don't want it breaking any further later than this because it's getting too close to the end, isn't it, Ty?
It's put up or shut up time, that's for sure. But it is a nice triangle. There's no question about that. I'd like to see this break. I think I'd like to see a breakdown.
This is an excellent day trade here. When it breaks past this, you can actually take you don't even need to wait for confirmation. You can take a snap of that low down to there.
No, and actually, this is a good lesson. Look, I actually had a question from Stacey today. Actually, she's in the room because she actually asked, is it possible that you can actually trade part time and not look at the charts for a long time and still be able to work? Stacey, I think this is a really good example where, if you've noticed, even today alone, we haven't gone any lower than a 4-hour time frame. We're looking at 4-hour, 8-hour, and daily charts, and all of them are giving us the setups that we're talking about. So, I think people would be quite surprised. I don't know, Stacey was, at how little a time we actually spend in front of the charts. Like, I know people probably think that we spend 12, 14 hours in front of the charts.
I might at the moment, but usually not.
I guarantee you, the amount of time Thomas is spending in front of the charts is actually, he's spending more time on his YouTube live in front of the charts than he would be during the day.
Yeah, that's true.
And that's the truth of it. I'm on maybe an hour and a half max. That's all you need. When you know what you're looking for and you know what you're trying to cover, you can do it very, very quickly, very, very efficiently. And it doesn't mean you have to be scalping all the time. Like, the bigger time frames definitely give you the opportunities.
Yeah, the bigger time frames do. We spend probably more time pricing up options than we do doing anything else. So when you think about it, that's probably the predominant time here.
Absolutely.
So here's the movement of what we expect. It proofs. We're taking it 2/3. Someone says, is this a week off method? No, not really. So usually in one of those methods, I'm actually still gobsmacked how many people are just finding out about this thing, and supposedly now it's the biggest and bestest idea. Usually you want a false break to the upside, and it looks a little bit different. So I would say that it doesn't really matter, again, about the type of pattern that you're seeing. It's about understanding the market psychology, the series of lower peaks. We need to get away from thinking about the markets as, we must have the perfect head and shoulders. We must have the perfect double bottom. What we need is to understand, what are these candles telling us? What's an indecision candle telling us? What's a shooting star, a hammer? What are these specific things at specific levels, telling us about the market psychology. And when you start thinking about it like that, it's like becoming like a glorious artist or a savant or something, because you really start to think about things totally differently, and then things become clear. And at that point, you know you've just cracked the code, realistically. Now, if we break through this level tie, we expect it to come back down to here. There is still a chance with the FOMC meeting that we do the full reversal. And again, the distance is going to be all the way up to the 87. There's two ways to play this one, and I think we're going to get the clear tonight. We're going to get the clear tonight. We've got a question coming in for New Zealand Swiss. Let's have a quick look at that live. Why not? So New Zealand Swiss, let's check it out. 8 hour here, interesting in itself. You can see that it's been in a decent decline. There's probably a little bit of series of kind of equally highs over here. Do we have anything on the time frames? Let's have a look from top down perspective. So basically 2 steps down, 1 step back, 2 steps down. It's under the key support. Let's go back to the weekly. New Zealand Swiss. What a strange pair. I haven't looked at this one in a very long time. What can I say? I'm clutching here. I'm clutching when I look at this type of chart. Ty, you see anything? I know your voice is not great, but you see anything with this analysis?
Not really. I don't look at it and get excited. I think the opportunity was the first one, that roll reversal touch, that second low. Look, it's coming down. Look, it's respecting the 20 moving average on the way down. It's doing. If you're scalping, I think it's doing the job. I thought one of the shortfalls of actually doing this from home today is I've got my bloody cat on the desk.
That cat traded
over my microphone.
Guys,
oh my god!
When that cat was a kitten, we were trading FOREX a long time ago, back in 2009.
That is true. This cat
jumped. It jumped on a keyboard, and it traded a couple of lots. Now, for anyone in FOREX, it traded. And guess what? Did it trade in the wrong direction? I can't remember.
I'm pretty sure it was.
So cats can do damage. Put like a security lock on your computer if you've got a cat. It can trade. Don't worry about that. They're smart.
Actually, one of the funniest things I've ever seen was actually when this said cat named Frankie. Thomas had. Because we used to trade, like literally when we first started, we were basically doing the opposite of what I told Stacey today. We were literally doing 18-hour shifts in front of the charts.
That's true.
And Thomas decided in his wisdom that he was going to spend so much time in front of the charts, he was going to get himself his first Herman Miller chair.
That's true.
Well, this cat, Frankie, decided that he was going to jump on his Herman Miller chair and started clawing at the webbing. It was like, oh my God.
My face, believe me, the upsetness was real. I didn't forgive the cat for quite a long time. Anyway, back onto the charts. Here we've got gold, Ty. It's clearly weakening. Now, this is a classic for members of the community. Look, this is absolutely textbook to the course. And if you have done the course, most of you will have by now, hopefully, with all the specials have been running recently. This is a classic trend line, and it's also a classic weakening trend line. And I don't think the course can get any better when you see stuff like this one, Ty. What a classic case. Now, I didn't go super into it in the YouTube live streams because well, frankly, you guys are obviously the students here, and we want to kind of leave a little bit back. But look, we've had the trend line, and we didn't see a higher peak. So anyone that's doing it, of course, it's all about seeing the higher peak. We get the weakness that comes through. It then comes back down and tests the trend line and fails to make another higher peak. In fact, it makes an equal peak. Now, Tyrone, how weak is this telling us the market is getting? Is this our get out of jail free card right here?
Yeah, price is telling you all you need to know about the momentum of the market, and I think there are a lot of little tidbits of information I think in our course that resonate with a lot of people, because a lot of it is proprietary as much as a lot of it is mainstream. I think it's what we make of the mainstream stuff that is the important stuff, and the way we validate trend lines. Nobody else validates trend lines that I've seen in the world, and I think it's one of the biggest keys to trend lines, because when you can understand the weakness, you're going to save yourself that final trade. And that's the difference between being sometimes really profitable and being just profitable, understanding when the market is definitely starting to weaken. There are times to step away. Can it go up again from here? Well, of course it can. We know that. But the statistics will tell us, and the momentum of the market will tell us that that's not the likely play here. So what we're trying to do is put the odds, definitely in our favor, which is what we want to do. Understanding when a trend line is, potentially weakening or about to fail, or suspect, if you like, is really, really important. And I think
Save you a lot of money.
It's those things that, because that's the problem, right? A lot of people do the course and they say, "Oh, I'm going to skip trend lines because I know what trend lines are. I know what support and resistance is, and I know this and I know that." And look, you know what? You probably do. And I would say, as a whole, even for the whole technical analysis part, a lot of people who have done a bit of technical analysis probably know maybe 70 or 80% of what they're being taught in that course. But make no mistake, it's the 20% that you don't know that brings it all together that makes a difference. And that's why I'm so proud of the course, because I think that we've culminated all our knowledge into the things that you should know. Yes, everyone knows what a trend line is. Yes, we know they're subjective, but not many people know how to identify a weakening one, or how to actually use a strong one like a validated trend. And this is a perfect example, actually 101, of how it's failed to make the higher peak. And when you think about it logically, it's pretty illogical, right? Like, you can see the buyers have failed to make a new high. That's telling you straight away that the seller's momentum is kicking in a lot quicker than the buyers can actually get it up there. So it's putting pressure on that trend line that wasn't there previously. In the previous touches, all the momentum was with the buyers, and they were literally just pullbacks to the trend line. So we see the weakness, and we need to identify it. Does it guarantee it? Of course not. But 9 times out of 10, I see this happen, and the trend line is destined to break. And if you had understood that, anyone who was longing that trend line at that point there, should be a little bit disappointed with themselves, because you've just probably you probably lost that trade, because your stop loss probably would have been taken out, because you would have had a fairly tight stop loss.
Oh, you definitely.
You had no business going long there.
No.
And
you really didn't have any business again being long in this trade, Ty, until it got down to this previous role reversal. Resistance becomes support level. And you know what? It's not out of the woods yet. For gold traders, we've already seen a break up, failure to make a new high. It's coming down, clearly ahead of FOMC. The reason I'm not, or Tyron and I aren't giving you any specific zones right now, you know what? Ahead of that much news, it could look like in trading, this can look incredibly different tomorrow. We're showing you the key levels. I'm going to be watching the 1842, 1844 level like a hawk, Tie. I want to see how this plays out. It comes down here, it bounces, it breaks through there. It's got me back in, at least to the trend line bottom. I'm going to take a trade. Why not? Now, if it busts back below this point, of course, that's going to equal shorts. And, when we start talking about how far down can gold go at the next zone, well, you're talking about probably back down to here, so an 1810, quite a lot of money here in gold, both ways. So be very, very, very agile in gold right now. It's hard to have a position today either way, just because of the nature of what this thing is doing. It looks weak, but everything can change in 24 hours here.
Absolutely. And make no mistake, gold can be there by the time you wake up tomorrow morning.
Yeah,
it's one of those ones that can move extraordinarily quick. We have to almost take a double take the next day and say, did it really do that? Or have I missed data? Has there been a data slip?
Yeah, exactly. We've got here pound yen. You can see this trend line on the downside continues to hold up. This is just drawn from last week. Another Forex pair here for everybody. And yes, I will answer the question about ASX 200. I did say I would. So thank you for coming to the Wednesday webinar. We will cover it soon. But yeah, series of lower peaks coming through here. You can see the market's weakening. Guess what? You get a bust off high tomorrow, 155.50 plus. It's made a decision. And you know what that decision is? Buy. And why? Because you've got a series of higher lows coming in here with huge buying momentum, by the way, Ty. There's buyers here. There's buyers here at this stage. Every time it's come down, it's been met by big buyers. You've got an absolute dedicated trend to the downside here in terms of lower peaks. But as soon as that busts it off, it's going to take out all the short sellers' stops. So that's something that I'll be watching on the pound yen. And that probably brings us to the US dollar yen to have a look at what that's doing. Because guess what? If the USD index breaks through, what's probably going to happen? Well, the trend's actually been relatively strong here for US dollar versus the yen recently. And I don't think that's going to let up based on what we're seeing in this pattern, Tie. So if the dollar index goes long, could we expect this pair to follow along? What are your thoughts?
Oh, yeah, it's got 111 beckoning with the right sort of move on this one. I think it's, and it's deceptively, sneaking up there. Like it's still making higher highs and higher lows.
Yep.
This is an uptrend. Make no mistake. And although it doesn't look sexy, it doesn't always have to be sexy to be efficient. And and you can see what I like to see on a pair that's going up is multiple time frames that are giving you support at key levels. So you've got a 20 moving average holding it up here on the 4 hour. We saw the 80 also had moving averages behind it. The daily's got moving averages behind it. When you see, like, this is putting moving averages behind it. Okay, the more moving averages on different time frames that it has behind it, the harder it's going to be for the price to go down. Right, so it means that your stop losses are safer. It means that the path of least resistance is actually up, not down, and that's what I like to see. Like it's giving you multiple ideas to potentially get in, and it's got a very clear target of probably 110.70 in the first instance, but after that there's nothing stopping it getting all the way to 111, 111.50. I like this one.
I like as well. I actually quite like the pound yen. That because the pound's been, well, a lot of it will come down to tomorrow, but at this stage I'm looking at that pound yen and feeling excited, much more excited than this hideous chart of odd yen. Wow, currency's been hard sometimes in some of these type. Let's quickly go through the markets. I got to go ASX 200. There's a question here as well. Will silver follow gold? Yes, generally it does. However, with silver at the moment, it does have these, because of all the squeeze stocks. Remember, there is a little bit of a movement there still with people buying physical silver, and they're still buying it out of control, and that's leading to I think quite a lot of like silver hodlers. So 27.72, it's higher than gold by a considerable stage, and it has been for a little while. So silver's more of a dangerous trade. I think if it gets busted down low, it could move very quickly, just to kind of catch up with gold. But at this stage, it's stuck in the range, and we're just not looking at it. Gold will do its thing. Silver will follow to the upside for sure. Let's have a look here at BTC, just quickly, Ty. Crypto markets, and then we'll go over to the ASX and other indices. Crypto market is weakening. Now, I think, and I haven't really run this past you, but this series of lower highs here was a pretty considerable closeout. I also think there's a compelling argument to say that we've got two troughs here, and that there could be an intersecting trough at the exact same point as on the 8 hour, because I put on the 8 hour to show you this one. The 8 hour, what is this line? Get this, get out of here. The 8 hour has so much going for it around this 37.6 to 38 area. So I think crypto is actually going to come down here a little bit, but I would be very surprised not to see buyers in this zone. Resistance, 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 bottom of this line, 20 exponential, 50 exponential cross to the top side on an 8 hour time frame, plus the intersecting troughs coming through with a nice equal movement. And I think that's one of the things. I haven't even done this bit for it. Let's have a look how equal these are. Not bad. Not bad at all. Okay. It makes sense. Sometimes things make sense.
I think when the craziness leaves the market, common sense and technicals start to prevail again. Like there was a while there where technicals made no sense. Once it broke those key levels and it was falling on tweets, nothing can stop it then. At that point, it doesn't matter how good the technicals are. But when the craziness seems to leave and they start to steady up, you can go back to relying on your technical setups and levels, because when the market is a little bit uncertain, you can bet your bottom dollar is going to gravitate to the key levels. And you can see very clearly here that those levels are starting to kick in again.
Yeah, I'm starting to think that this was getting back in. From what I saw here, from this breakout, the way it's traded, the way it tested that trend line, then suddenly went up heavily, it's starting to look a lot more technical, and that's got me excited. That being said, whenever you look at even here on Ethereum, notice how it can't get through the resistance and it sells off. Next step, back down to support. Ethereum weakening at a much higher rate than BTC. BTC's the strong. That's the top dog right now in the markets of the crypto world. Let's move over now to the ASX 200, Ty, our market. People want us to cover this. There is reasons why we barely do, and that's because, what the hell is that? Let's have a quick look at STW.
That's an anomaly, surely. Yeah.
Yeah. What the hell was that? That was insane.
That is not there in the real market.
Nah. There we go. Yeah, that's better. All right, that was.
Yeah.
Don't ever tell me the data doesn't get sometimes a little bit dodgy in the markets. All right, let's have a look here at what's been going on. So our market's been incredibly strong. The ASX 200 beast mode engaged. 20 moving average has been the buy zone, and you know what? Probably will continue. I think at some point we will have a pullback here. It probably is starting to become due. And we are in June. Now, July, notoriously a very good month in the US, the best month in the US. We both feel, well, I'm never putting words in Tyron's mouth, that there will be a decent correction later on this year. But I have this feeling that the market just wants to kind of just keep going up because the fear's coming back into the retail community. When you look at this, when you look at something like CBA and you look at some of the top Australian stocks, they're just out of control in terms of some of the PE ratios. And they're not companies that people can't value. I'm watching this solely on very specific timeframes, and I think the 8-hour here is probably my pick. 20 moving average, 8-hour pullbacks have been one of the zones that I'm watching. So I think it's not overly extended to the point where you can't still pick up longs, but I could see it pulling back here a little bit, moving down, finding some resistance across this board, and then being purchased back up. No doubt some of the multiples here don't make sense. I mean, I'm pretty sure Ty's going to say pull back down to 7,200 at some point.
Oh, I think it's almost a certainty because the market's got it's going into uncharted territory now. Like it's obviously making absolute all-time highs, and it's very difficult for a market to do that and actually not pull back to the previous levels that it had broken through previously. Which you got to go a long way to see this. But you can see there that this is a market that's almost on the verge of being out of control. Now, I don't say that lightly either. Like you're talking about very serious moves here, and there's a lot of I don't know. I mean, the pullback. I don't think we're going to be having any crashes anytime soon. But at the same time, this is an index. This is not being this is not being exactly driven by a couple of traders pushing the market. Like this is the market that is needing a pullback, and it would be healthy. It'd be healthy for it. I think it would be healthy for it. My fear, and this is what obviously we do. The ASX 200 is very dear to our heart. My fear is that the higher it goes up without a pullback, the harder the crash is going to be.
That's
and
correct.
that happens all the time. You can absolutely guarantee that if a market keeps going up and doesn't pull back at the levels that it should, the crash and correction is generally an overcorrection. And that terrifies the market. And then you see a massive overcorrection because people think, oh my God, here we go, GFC Mark III. So that's why, and that's why I've been saying that on the SP500 for a long time, that we do not want to see a market that is going up vertical without having the pullbacks, because they're the sorts of markets that come crashing back down and they overcorrect by a lot. And then they affect, they affect so many different things then. So that's my fear for it, that it needs to pull back. It's not so much that it has to, it actually needs to.
Yeah, I agree with Ty. Here's the other issue I've got for the ASX 200. We're seeing the rotation out, guys. You can clearly tell here. It's a 1 month chart in the US. Guess what's down? XLF, financials, XLB, materials, big sectors in the Australian market. Industrials also finding a little bit of decline, and then we've got XLP. Look, we're sugar rushing our market just as well as the rest of the world. Don't worry about that. But the ASX 200 is not an easy trade. If you're trying to look for technical trades here, yes, there's been some good pullbacks to the 69 that you could have taken. I believe there'll be a pullback, and so does Ty, back down to this 72-ish level. That will be a fairly decent take as well, but it hasn't been as good as the US market. Just hasn't been in the last couple of months. Let's move over to a few other things that I guess we want to cover here, Ty. So we've got the US 100. We've got CN50 for Ray as well that we want to do. This is clearly awaiting news. For anyone that didn't see the video today that I put out on YouTube, this is very symptomatic of awaiting the FOMC. We're sitting, the most boring pre-market you've ever seen in your life, 0.01%. I mean, does it get any more boring than that? I don't think so. And that's because it's at the previous level of resistance, which acts as support. And if we even break this down even more, what you'll notice, especially on the QQQ, which is of course the Nasdaq anyway, this 1 hour 20 exponential moving average, 1 touch, buy, 2 touch, buy, 3 touch, it's going to open up just around here. This is the exact level where we either break down we find some weakness, or the Fed comes and it says, hey guys, don't worry, we got your back. We got your back. We're going to do everything we can. It's all good. We're going to ruin everyone's lives in the future. It's okay, guys.
Yeah, actually, Hannah's asked the question. I'll answer Hannah's question. She said, can we still rely on money printing? Hannah, if they start printing money with these, but if they start printing more money now when the market is at all-time highs, I think that's probably symptomatic to really show how out of control it actually is. Like, printing money is actually a mechanism to try and actually bolster market movement and bolster the economy. So if they introduce that now, where the market is at already very, very extended levels, I think it probably really highlights how much trouble everybody's really in. I highly doubt it. Yeah, I highly doubt it. But in saying that, like Tom said, they will do anything and everything to make sure that this market doesn't fall. But I would be very surprised, and I wouldn't be relying on it.
No, I think the problem is, look at this market go. I think the problem is, whenever you think about a market right now, is that could Japan ever stop? When they started, they couldn't stop. The US has never been able to stop. They never even tapered it properly, Ty. Like, even back when they started all of that. Now, here's the CN50, and this one here is from Ray. And I guess it's kind of doing the dance of the catching the falling knife dance. This market definitely is tanking hard. Now, did it hit good levels? It hit the first level. You can see the bounce. It came back down. And there was actually a series of lower peaks that came in here. It's very thin at the moment, this market. Bizarre. Just huge moves each way. Massive dip buying, followed by big sell-off. Wow, how obnoxious. That's clearly taking retailers' money for sure. I mean, if you've ever seen a retail chart, in the morning it buys, in the afternoon they steal it all from them. So where is it? It's at the next level right now. So somewhere in here, if we go even over to a line chart, might be the best. Somewhere around this zone, you expect it to probably find some buying pressure. But then after that, unfortunately, I could see it come... This looks radioactive, this chart. It could come down to like 16.8. Now, I do find that in the Asian markets, it's not even necessarily about the 1,000. Sometimes it's about the 17.8. Notice how it stops. 17.8 was the level. Then suddenly you've got like the 16.8, which has been a buy zone. Eights matter. In this market, they matter. And you better be paying attention.
Eights matter in Chinese culture, full stop.
Exactly.
Really.
Yeah.
So I think that there would be no surprise that would correlate to the market. Mm-hmm. I'm not actually surprised about it at all. It's just a nuance of... It's interesting though, isn't it? When you actually mark it up, it's uncanny actually how often it actually does mark up to those levels.
Let's have a look.
You'd want to be wary of that if you're selling options, that's for sure.
And I'm sure there are some of the strikes that actually get hit. We don't trade options in this market, but if we did, I'm sure I would be very wary of the strikes around those levels. I bet you they're more expensive. Maybe we'd sell 8 premium, Ty.
Yeah.
8 premium. Selling 8 premium might be a concept. Maybe I'll have a look at that with you. So look, it's pulling back very, very hard, and it's too early to tell exactly where this stops. Whether it stops down here at the 16.8 kind of zone, or it stops where it is right now, we don't know. If you want to have nibbles at these kind of markets, and effectively you're buying the dip at kind of better levels, then you can see the daily 200, not that seemed to hold it that well. You can also see that there is some structure throughout this point here. But Tyron and I would always be saying, look for the lightning bolt, or look for a double bottom.
And it's got to be on a time frame that's significant too. Don't be looking for a 15-minute lightning bolt.
Yeah.
Like it'd want to be on a 4-hour, probably at the very minimum on this one. Because I think that, it's a difficult one to trade. I don't know if I'd be watching with caution.
I think if you're taking positions, then let's say you always wanted to buy this price, then you're not going to go all in. That's mad. No, okay. No, you're exactly, going to maybe go, okay, I want to put like a little 30 in, because it could be investing. Investing, you're buying the dip, you're going to hold it for a long period of time. You want to buy this market and hold it. I could see, the rule of thirds coming in here. A third in at a level, a third in at another level, and a third when you actually see the confirmation. It's different from trading though, yeah?
Yep.
It's not a trade.
I think this is probably important. This is probably important for people who look at indices as a mechanism to actually build their investment portfolio too. So if you're looking at levels to actually add to your stock portfolio, these are the levels we're talking about. You don't have to actually buy and sell everything. You can just say, well, this is a direct representation of the economy. So realistically, these are the levels that you should be buying your your positions and adding to them. But are you going to go buy everything at that level? Well, no, that doesn't make good sense from an investment standpoint, and even from an option standpoint. Like I know we've got a couple of people in the room who trade options in here. Shout out to Victoria there. I can see you there. This is where technicals come into their own, especially if you are selling naked puts with the view of actually holding that position. That's a prime level right now where you would be actually selling a naked put with the view that if you had to buy it there, you'd be very comfortable buying it. There's no worries about that. And this is where technicals... I can't begin to tell you how important technicals are when it comes to options trading. I mean, you're going to find out very, very shortly how important it is. But this is what we're talking about. This is the sort of level where you would say, hey, well, if I was going to be selling puts, I would be quite happy to effectively own it at this level. But are you going to go all in? Absolutely not. But it's these key levels that we're talking about. And, the beautiful thing about a falling market like this and premium are the two equal big premium.
Yeah,
high volatility equals lots of premium, lots of juicy premium.
Yeah, and look, there's sometimes things hit supports, and that the good thing about options is you can always mitigate your risk as well. So Ty just said about selling naked puts, but you could also sell a put here and then buy a put underneath, take a spread, and then effectively, be looking at this. Now it's a different strategy, not an investment strategy. It's more of a let's make trades strategy, and a lot of people use those kind of spreads on stocks that move heavily. So say like yesterday, a massive hit piece got put out on this stock here, Ty. It's DraftKings, massive gambling fest kind of company here. And you know what? Volatility would have spiked out of control. Now, because it was a hit piece, it wasn't actually an official announcement from a hedge fund. I bet you people were selling spreads underneath because it was a key level. You can see here, 45, support, resistance. It would have been out of control with implied volatility on a 2-week option. And they were probably selling a put, buying a put, putting a spread in, because you only want to put a spread in on this one, collecting premium with the idea that it will hover, or at least that the company will come out and say, hang on a second, we refute all those arguments. Guess what? As soon as the company refutes this massive allegation by a hedge fund with sell orders in the market, by the way, and we know this is a beautifully loved retail community stock as well, then when that does happen, is that going to stabilize price? Yes. Is the implied volatility going to drop the next day? Most likely. So guess what? You get in, you take that trade, that investment trade, and this is what's going to be in the course, and it's what we're going to go crazy about, and all of a sudden you're going to actually benefit from the implied volatility. Now, you only do it at specific points with the specific knowledge that you can put together, but this is the type of thing that you can take advantage of in the markets, and it's a cool one. So for the rest of
that volume spike.
Oh, I know, yeah, it was insane. Like everyone I knew the retail community would get pissed off, and they did, Ty, in droves.
It's not very often with a volume spike nearly acts as support for the chart.
You'll see. Look at this. Look at the social volume change yesterday. Look how many pissed off retail traders. It's funny when there's social pissed off retail traders, they go crazy.
And you know what's funny about that? I think from my limited research on YouTube, there's a direct correlation with pissed off traders to nasty comments on Thomas's YouTube channel. As they get, the more and more pissed off they get, the nastier the comments get. They seem to take it out on poor Thomas.
They're all right. We're all good. We'll go a question here from Rob. He says, Tom, you were saying, why don't you do ASX 200 too much? And then you got distracted. Could I know why? There's a few things. We don't do ASX 200 on the channel because ultimately it's kind of like a killer for the channel. I've tested some things. Pete, look, I could do the FTSE as well, but the problem with the FTSE is only a very specific following like that. It's just not the biggest market in the world. The other reason is ultimately our market, the ASX 200 or even the FTSE, once you understand what's in it, you can actually just look at what's happening in the US, and we generally follow that. There are nuances, of course. Our banks are different, but still we do... when we're not in a crisis period, Ty, how often do we trade pretty much in line?
100%.
60-something percent plus.
Yeah. And Robbie, the other thing is too, we look, believe me when I say, we probably look at the ASX 200 chart more than any other chart in our daily life. It's probably the one we follow the most. We know it so well that we actually don't even have to have a look at it to know where it's at. We just know the levels. We can... like we know it intimately, and I think we're probably almost sick of it by the time we're doing this stream, aren't we, Tom? Like it's just it's literally our guiding light. So we almost know it to death almost, and there's nothing wrong with that. We probably don't want to bore you with the little bits and pieces that make it go. And again, I mean, a lot of people are just not that into it because it is so it's all about the SP 500 or the NAS.
Yeah, it really is just you have to go with the numbers here. This is an interesting one that's been brought up by, I think, Kevin in the private Discord community, and he said, is Intel breaking out? And I would say absolutely it is. Obviously, it's got this 50 exponential in front of it, but that's pretty good consolidation on a very high-quality stock that had a gap off earnings. We know it loves making up the gaps. We know it loves having a go at trying to get through the gaps here. Gap fill right there. So will it bull? This is probably relatively safe compared to some of the stocks in the market right now ahead of the Fed. But nice little action coming through here. Intel's certainly one of them. Another one was Boeing. I think that's back on support here. Yesterday, you saw some buyers try to get back in. Daily 20 exponential, previous resistance over here. I think when it got through this zone of multiple series of lower peaks, it tried to prove us it wants to go further. And you know what, Ty? I think it really is trying to get on up there to the 300 to the 320 level, and I believe it will. This is the kind of zone that you're looking at.
It's doing the right things.
Yeah, it is doing the right things. What else did I wanted to see what your thoughts were on a few. So we had have a look at this chart. Now I know you don't follow this chart that much. What do you reckon about this one? Let's see what you think. I'm not going to I'm not telling you anything about this one.
Is this the one that I see ads on the commercials at the TV at the moment, or the Squarespace website?
No.
Like the new... Oh, okay, so is that a different Square? Okay.
Yes. That's an inferior crapper one.
Yeah. You know what it's going to be? You know why it's going to be really good for me to jump on with Thomas and do his live stream in the future a couple of times? Is because half the companies that he's talking about I've never even heard of. And that's a good thing, because I look at the TA and say what I think on the TA, which I think in the end is the most important thing.
That's correct.
And I look at that, and I look at that, and I see lightning bolt, broken key levels above the moving averages, broken the key trend line there. Off we go to the to probably 260 first stop, 280 next stop.
I totally agree with you.
I don't care whether it's square or whether it's round or rectangle. It doesn't make any difference. Technical analysis is technical analysis, and that's why we are so passionate about it, because at the end of the day, everything comes down to buyers and sellers, and that tells you everything you need to know about the market. I see lightning bolt. I see all of the potential resistance behind it. Moving averages are all behind it. The path of least resistance is up.
This is another one we had in the chart of the day.
Almost identical.
Klim, yeah. Oh, they are all identical, these ones. But this one was a beast. Thank you very much, Klim. We chucked this in the room. I'll just show everybody this. Where was this? Now, I do want to just reiterate, this is just us showing you teachings of the course, guys. This is not a signal-y kind of thing. But there was a point here. Where did I put it? Pins, here it is.
Everybody's so excited about getting Tom drunk at our conference, so he takes away his little, this is not financial advice.
This is not financial advice.
He's going to take
education, all right?
Completely disappear. We're going to get rid of that.
No.
This is not
I don't get
financial
drunk
advice
anymore. I'm allergic to the alcohol.
Oh, I think we can get it right.
Here's the closure point, and you can see how important this is. And all of a sudden, guess what? Market was down yesterday. What happened? Pins just went, stuff you market. Great technical. Similar one with Shopify as well. Let me show you this, Ty, just to end up here. You like the Shopify?
We've got to do CAD, but no one's going anywhere until we do the CAD.
Oh, okay. I better do
Rave requested.
Wait, first, do you like Shopify?
I do like Shopify. Yeah, I do like Shopify. But what I like more about Shopify is that flag.
Yeah, that's a good one.
That is a really good flag.
And I don't even believe in the price, but you know what? A technical is a technical. What do you want? US dollar CAD. What's that?
Yeah. It's a Ray requested. I wasn't going to bring it up. I wasn't going to, but Ray wants it, and I think it's important that we.
Okay. What's your levels?
Look, this is going to 120, 320. There's no worries about that. Dollar index strength is obviously going to help this. That has formed a rounded bottom. It's been doing this for a long, long time. It's breaking key levels. It's making the higher highs and higher lows that we're really, focused on. We talked about this extensively last Thursday at the Q&A, and I know a lot of people were able to get on board before it broke, which is awesome, because we identified it as a team. In fact, I almost got cranky with people because they weren't. And I was, like I said, I was already starting to lose my voice last Thursday, and I thought that everyone had fallen asleep on me. So there was a little bit of crankiness, and I think it was because of the CAD. But I really, really wanted people to understand, because these opportunities don't come around all the time. A setup that's actually taken weeks and weeks and weeks of market action, and that's what it did. The rounded bottom did that. It's doing all the right things now, and realistically, if it breaks to a new high and goes past the 122 level, 123.20 will be a formality, absolute formality. So I think it's still a good trading, and this is without the dollar index even going. So once the dollar index gets cranking up, it will really help this pair. Not as much as it will the dollar yen, but it'll still help it. And you can see again, a lot of the trouble is starting to be left behind. And that's what's important. And obviously, you can see why the 123 is important. You can see that we've got serious levels of resistance there. And
yeah, this is a big close for it. Even I can come in here and I would be like, oh, that's a good close.
That's a good close.
Yeah, it's a good close. First high close, completely smashed all the other wicks, pulled back exactly as you want it. You noticed I went there on the 2 hour. Yeah, I mean, this is looking way better. I guess it's a beast.
It's starting to finally do something. Yeah, Jessica. Yeah, we did the ASX, unfortunately, but look, you didn't miss much. We were just saying that it looks overextended, and it's probably due for a pullback to the 20. So that's what we're really looking for. So just if you're going along on it, just be really, really cautious, because it hasn't pulled back in quite a while, and if it goes much further, the pullback's going to be aggressive. So, and if you're really interested in to catch the replay, it comes up. The good thing about this new format is the replay is up literally within an hour. So jump on in and check it out.
Yeah. The link's already in the Discord community. So 72.30 here on US oil continues its rampage up. I'd start to get very... I'm being cautious here based on what happened previously. I'm in two minds. I mean, a lot of what I'm doing has actually been following ZOM. As soon as that hits that level, I'm out of oil, man. I'm out. I'm done. Goodbye. I can't stand thinking about holding ZOM past that level. That was always the aim. And not this stock actually that I'm holding, but just the oil. It's too close. We've done so well. We've done so damn well, and it's too close. And now I'm getting antsy because there's too many articles, Ty. Guess what they're saying? All the $100 are coming out, and I'm scared. I am scared, even though the price action is still up. So you know what? We are laser eyed.
They do write those articles with absolutely no issue whatsoever, because it's so outrageous. It's so outrageous at the time that no one really expects it to happen. So they're never going to be condemned for saying something so ridiculous.
But it gets
and if it does happen, they're like, oh my god, we're market geniuses. So they're really saying
I think they write the articles to steal your money personally, but
they probably do.
somewhere along the line.
Yeah, you've got to be careful with oil around this. We know it's starting to approach that zone now where it's going to be starting to, it's going to start to feel the pinch. And it does, Exxon's one of the biggest oil companies in the world. We know this, right?
Yeah.
When it's approaching such a key level, and it's a key level, make no mistake. I think it's a very, very serious level. It has to have an effect on oil. So, realistically, it's a tough one, oil. And it's done, you couldn't have not made money on oil, right? You could not have not made money on oil.
I would be surprised if anyone in the room that was trading oil didn't make money. Please God.
It's been technically beautiful.
Really,
it's been like a beautiful poem written by an angel from heaven. But that poem is starting to take a turn to the dark side. So you've got to be a little bit careful. You've definitely got to be a little bit careful now. That poem's starting to get a bit dark.
Yeah, I agree. All right, guys. Good luck, everybody. Remember, if you haven't got positions in and you're thinking about taking them now, you are going into a very risky time. Reiterate again, FOMC, FOMC, FOMC. Although it could be absolutely a flop, unfortunately, with the CPI news, what it's been doing to the market, with clearly the non-farm payrolls actually having an effect on the market, news is back in the forefront, and the market's trying to figure out in the future what exactly is going on here. Will they see like a continuation of the same thing that the Fed's been doing? Will the market continue to be supported, or will they start winding it back? Because of course that's going to have a big effect on how the market perceives. I expect them to just be like, it's all good, guys, we got you back. But you never know, and that's the problem with this. So for entries that are in there, risk management. For entries that aren't in there, maybe wait and see what it looks like tomorrow. We'll be covering them in Chart of the Day and other things in the community. Remember, get into the public Discord and private Discord community. And guys, Chart of the Day, you want to be in there. I'll be writing a new secret trading tip. I said I'd do it last week. I'll do it this week. And what was the other thing I wanted to mention, Ty? Oh, yeah. People don't seem to know all of the weekly private content. It's all Monday, Tuesday, Wednesday, Thursday, Friday. It's all here. Tyrone and myself, we put the link in here. It's unlisted or private, and you can get it here. So please go check that, guys. Monday, Tuesday, Wednesday, Thursday, Friday. We never leave you alone.
No, most definitely. And tomorrow is open to the public Thursday. So everybody is welcome tomorrow to Thursday Q&A. So I'll be putting the link in the room, in the public room for tomorrow to give everybody a chance and a piece of the action. So we do that once a month. So if you're interested in... Thomas has got to go. He's got to start.
I'm sorry, man. I got 4 minutes to prep it out. All right. Thanks so much.
Thanks, everyone. Thanks so much.
Thanks, everybody.